Welcome to the Retirement Roadmap by SHP Financial, a podcast empowering today's retirees and pre-retirees to make well-informed financial decisions that will help you spend more time living and dreaming than worrying and wondering. Are you ready to get started? Let's go. Welcome everyone to another edition of SHP Financial's Retirement Roadmap podcast. I'm your host, Matthew Peck. Today we're going to be discussing a company I believe we all now know, although might wonder what it is exactly that they do. Why are they so important? Why do they drive the markets today like no other company that I have seen in my personal 25 years of following the market? Who am I talking about? Well, that would be NVIDIA, of course. If you ask me, as I said, 25 years ago, I would never have heard of them as a young 20-year-old first entering this world. And I imagine a lot of our listeners didn't really know who they were maybe even 5 years ago. But nowadays, they are one of the biggest market movers of all time. And I say that because they are now at the center of one of the most biggest massive moves of our generation, which is the AI or artificial intelligence trend. And is that a trend, or is it cyclical? Is this like the dot-com boom and bust of the late 1990s? And again, as I said, very simply, what does NVIDIA do? Who are they? And how did they get as strong and as critical as they are currently? Here to discuss all of these questions, I have a very curious member of SHP Financial. His name is Rafael Hanna. He joined us recently, only about more than a year ago, although he has spent a number of years in the industry. And I'm also very, very happy to announce that he's also a valuable member of Team Matt.
That's right.
So without much further ado, I'd love to bring on Rafael Hanna to discuss a little NVIDIA. How are you, my friend?
Good, Matt. Thank you for having me. I think they say in radio, first-time caller, long-time listener. So I'm glad to finally be on the podcast.
All right, well, I appreciate that. Long time, first time.
Yeah,
good,
right.
Good.
Is that what they say? Yeah, long time, first time. So
good to have him here.
On.
Although clearly he didn't get the memo, because when you're on our podcast, you wear a shirt and tie, young man.
I know. You see,
seriously,
he's
just didn't
putting
bring
me in
it.
my place early. I think he's setting the tone for how this is going to go today. So.
Exactly. It's nice when we get to record these, after a day of meetings, so now I'm all dressed up. So now I get to outclass the young guy.
That's right. Yeah,
so,
putting me in my place. So.
Yeah, because first I'm going to look better, then I'm going to sound better.
That's right.
Everyone's ready.
We'll have to go at it today.
Well, before to kind of kick us off, Ref, I want to talk about. We're going to have a number of different stats and different numbers, and so we'll try our best, honestly, to talk more about the trends, about why they were so important, what were they, and how come it has been as astronomical of a rise as possible. I got this stat right here, and so since 2023, so we're literally talking over the past 18 months. NVIDIA started at a market capitalization at $350 billion at the start of 2023. At the end, it got to $1 trillion, then $2 trillion, then $3 trillion. So this company, only over the past 18 months, forget about what they've done beforehand, have gone from $350 billion to as much as $3 trillion in a short 18-month period. And what kicked off this entire thing was that on August 28th, a couple weeks ago, they had a big earnings release, and everyone was focused on it.
Right.
Everyone was focused on, oh my goodness, are they gonna, where are their revenues, where are their projections going to be? And literally, we're kind of living in the world that NVIDIA has created, and all of our expectations are now going to be focused just on this one company.
Yeah.
So, if you don't mind, take us a little bit through the history of them. Like, who are they? What did they do? How did they get to be so instrumental in the AI trade of 2024 and beyond?
Yeah, it's a good question, and it's something that a lot of our clients initially ask us about. It's funny, if you look at where they are today versus where they were, you could almost say, within the space of, the chips and everything that they built, they've kind of made a 180, because initially, they were very focused on manufacturing chips for gaming and PCs and all these things, initially when they first came onto the scene in, the late 1990s, segueing into the early 2000s. But now if you take a look at them, with this whole AI revolution, what it's really evolved into is, yes, they're still making chips, but now it's kind of segued into this AI infrastructure, artificial intelligence, over the last 5 years, where we've seen, really unprecedented growth in a segment of the economy and the market that, we probably didn't even know about a few years ago, right? This whole phrase of artificial intelligence really kind of bursted onto the scene post-COVID. So, that's a little bit about where they were. Like I said, initially they were very big into, manufacturing chips for PCs, gaming devices, et cetera. But really in the last few years, before the market kind of came around to this whole AI theme, they've really kind of pivoted and we're at the forefront.
But now at the same time, okay, yes.
Yeah.
So here they are, they've been manufacturing chips, but from what I understand, so does an AMD, so does an Intel. There are other chip makers out there.
Correct.
So how did NVIDIA, so we'll get back to kind of how they were so critical to these trends.
Yeah.
But what about their business model itself that made NVIDIA stand out versus the Intels of the world or any of the other chip makers that our listeners might be aware of?
Yeah, I mean, companies like Intel, Qualcomm, we talked about this off air beforehand. If you look at a company like Intel, early on, they were really just focused on delivering, volume of the product, which is the chips. But if you look at NVIDIA, you would say that they were really focused more about the quality, not the quantity. So, for example, their Blackwell chip, which, is slated to come out beginning of next year, that's at the cutting edge of technology today, right? Where, Jensen Huang, the CEO, he's come out and said publicly that, they really focus on the quality of the chips, not the quantity. And I think, if you look at the market movement and the market share that they obtained over the last few years, that's the argument and the justification that can be made as to why Intel 10 years ago, was one of the biggest, semiconductor companies in the world. And if you compare that, side by side to NVIDIA, you've seen, just a drastic movement in both companies, one to the upside, one to the downside, really because of what I just really talked about, where Intel just really focused on this idea of, we're just going to deliver a product to the consumer. NVIDIA really focused on, yes, we're going to develop a high quality chips, but it's really the ecosystem today that they built it on, which keeps their massive customer base, like Apple, like Amazon, like Facebook, spending a ton of their, we call it CapEx, their annual capital spending back into NVIDIA. So for example, a company like Microsoft today, if you look at, their annual spending rate, it's my understanding, we looked it up offline, that Microsoft is spending close to 45% at least for the last few years, of their expenditures on chips to NVIDIA, which equates to about 19% of NVIDIA's market share. Revenue every year.
Right. So just pause this for a second.
Sorry.
I mean, just like kind of process that for
Yeah.
a little bit, because think of all of us, at least obviously SHP included, and much less, I'd say, pretty much every business out there. Well, we are Microsoft's clients. We have Microsoft Office. We use Microsoft Outlook. We use that as an email, PowerPoint, Excel, Microsoft Word. So for all of those Microsoft Word clients or people out there, if you use Microsoft Word, if you use Microsoft Outlook, you are Microsoft's client. Well, what you're saying is that Microsoft is NVIDIA's client.
Correct.
Right? Do you see?
Yes,
So imagine
correct.
that inverse of this massive company
Yeah.
that all of us use every single day, or for a majority of us use every single day in the business world. It's the flip side where Microsoft is calling up NVIDIA for
Yeah.
business, saying like, "Hey, can I get some of these quality chips?"
Yeah, exactly. And it's interesting to look at, you could look this up, on Google and see their breakdown of revenue by segment and who their biggest customers are. And if you look at, their top 5 biggest clients, it's Amazon, it's Facebook, it's Microsoft, and it's even the government. The government spending is now investing in these chips and artificial intelligence because the infrastructure today and in the future requires these high speed, high quality chips to really build on the data centers, the AI that, requires such high velocity of, technology. And that's really what they're relying on.
Oh, that's just amazing. So, and I kind of also want to unpack a little bit other that you mentioned, because you talked about how they got their start in the video gaming industry. Yeah. And so from what I understand, and then I'll kind of tell a little story or my understanding of it, then you can kind of enlighten us all, but is that here they were kind of, at the early on got into the video game trend. And as a mid 45-year-old guy, or mid 40s, I won't tell you. Well, I just gave away my age. Gosh, okay, so I'm right smack in the middle. Not.
You're dating yourself a little.
I know, bit. I am. But in that sense, in my time, right? Here we have Nintendo and Sega Genesis and all of the video game consoles. I mean, if you go back for our older listeners and wiser, our older, wiser listeners, they'll remember Pong and Atari and those first games that came out. So the NVIDIAs of the world were at the forefront of that. They were part of that. One of his earliest sort of customers was Sega and Sega Genesis. So for anyone that's in the mid-40s, they remember that. Obviously, people that are younger, they remember other things as Nintendo continued to evolve, PlayStation, Xbox, etc. And so NVIDIA was there. NVIDIA was there in the gaming industry. And they first came across my sort of radar screen because of that. Because I have my little brother who's 10 years younger than I am, and he was playing video games all the time. His buddies were all gamers, etc. And the idea of looking into NVIDIA as an investment is similar to the idea of, okay, do you want to invest in gold, or do you want to invest in the pick and shovels that will help remove that gold, or kind of the infrastructure behind it? In other words, if video gaming is the trend, well, how do I invest in video gaming without trying to pick the next big video game? I don't know, Warcraft, Minecraft, all the other, Fortnite, yeah, exactly, all the video games out there. Whereas, okay, if I can just look into the company that's producing those chips, then everything will be well. Like this, if this gaming industry and trend's going to continue, you can be there. And NVIDIA was there. So NVIDIA was already at that trend, and call it the mid 2000s to beyond. So that was a pretty big deal. And then here comes cloud computing. Yeah. Cloud computing with Andrew Jassy over at Amazon, with that kind of quirky idea of outsourcing all of their computing capabilities. The ability to stream, requires this cloud computing, and everything was about the cloud this, the cloud that, et cetera. And all of these hyperscalers were there. Microsoft was in the cloud business, obviously still is, Google, Amazon, et cetera. And guess who also was there? Guess who also was providing the chips for that mega trend as that was unfolding? And then lastly, we get to what you just mentioned, which is now we're a part of the AI trend.
Frenzy, yeah.
Yeah, exactly. And so guess again who is there and who is at the forefront of with producing these quality chips. And I hope everyone that we're getting the idea of how this all came to be, how this company became such a large market mover, was because they were there at these major trends all along. Yeah. And they've been driving the market. They've been up, and I'm not sure if I don't have it in front of you, like how much they've been up. I mean, I gave you the market capitalization, but I think how much has the stock risen? I don't know, whatever date you have, but go ahead and pick a date and give me an idea how much it's gone. The stock has gone up.
If you look at it just year to date, we're up over 130%. So, the moves, in such a short period of time, when you see a stock move 130%, we call it unprecedented, just because, stocks aren't supposed to double in 8 months. Yeah. But when you're in the middle of, I listen to Dan Ives all the time. He's, very well-known analyst on the street that covers technology. I mean, he calls this, he says this where he thinks we're in the first inning of what he's calling a technological revolution. So, there will be companies like this that, will go on certain runs, as we say in sports, like they're going on a run. And it's just a matter of if you're investing in the company, or if you're investing it through ETFs, you just want to make sure that you're managing risk. And that's something that we talk to clients about all the time, where I recently just talked to a colleague, and he told me that one of his clients, NVIDIA position grew to almost 25% of his liquid net worth just because of the movement
because
that it's made.
It went up so
high.
high.
It went up so high, exactly. So, that's the type of things that we talk to clients about, where it's, if you have, we call it investment risk in an individual stock, you want to make sure that you're appropriately, obviously within tax sensitivity reasons, diversifying either out of it, just because there is that risk that exists where, as we've seen in the last few weeks, if NVIDIA comes back 20% in a short period of time, you don't want to get whipsawed by having such a big position, right? And just making sure you're well diversified.
Well, and I think too, it's actually, like you said that, because I would definitely say that a nice little report that we're able to run for clients is what's called a stock intersection report. And somewhat obviously on topic / off topic, and we'll get back to NVIDIA because I have another question for you, Raf.
Yep.
But back to the idea of diversification in the stock intersection report. I think oftentimes people get confused or they misunderstand their exposure to any individual stock. But obviously we're talking about NVIDIA today. And I think what happens, they say, should I buy some? Should I not buy some? Or whatever that may be. Well, it's good to know that if you have something as simple as the S&P 500 fund, you have at least 6%. So NVIDIA itself makes up 6% of the S&P 500, right? About 6%. Yeah. Which means that, okay, if you have the S&P 500 fund, you have NVIDIA exposure. If you have any type of growth fund, you're going to have NVIDIA exposure. If you have an all stock index fund, you're going to have NVIDIA exposure. And then if you have that stock just by itself directly, obviously you have exposure there. And the stock intersection report is really handy because it's able to crack open all of the funds that you have, add it up with any individual stocks that you have, to then come up with a number to say, okay, your total NVIDIA exposure or percentages of your portfolio is 5, 10, 15, or as you mentioned in this case was as high as 25%, which no matter how good the company is, that's a bit high for any company.
Correct, for any company. And I think, when we do talk to clients about this, the report that you mentioned is really important because, oftentimes clients don't really get to see the underlying allocations within some of the funds, right? You just know what the percentage weightings are just by looking up VOO on Google, but within the broader portfolio, that report really paints a broader stroke as to, what the underlying allocation is within those funds. And I think it's important for clients to have that understanding.
And this is definitely a little bit off topic, but I always get a kick out of sometimes international funds. You think an international fund would just be, I got international funds. Well, some of those international funds have American companies because they're multinational. NVIDIA is definitely, and a lot of those, Microsoft, Amazon, they're selling all across the world. So sometimes you even have exposure in places you might not think that you would. Let's get, go ahead, sorry.
Yeah, no, I was just going to say, I think to your point too, it's interesting. I quickly mentioned, a couple minutes ago, you can take a look at the revenue by segment specifically for NVIDIA. Mm-hmm. But it's interesting, over the last few years, their revenue in China actually has been going down. And the reason why that's been is because U.S. regulatory reasons. Mm-hmm. For one reason or another, they've been prohibiting or limiting, U.S. chip manufacturing companies to export their chips to China, which you would think that would actually be a bad thing for NVIDIA, but actually, again, their leadership management product, all these things are, top class. They've been able to kind of pivot in a different direction. And again, their biggest customers are the U.S. government, those companies that you mentioned. So it's interesting to see how the shift in revenue, has kind of been cut overseas, but increased domestically. So I think that's just an interesting antidote to take a look at when you do look at a company like NVIDIA.
Exactly, and where their best customers are,
exactly,
et cetera,
correct,
where their revenue is driven from.
Correct.
Okay, so then I talked a little bit about it earlier about the .com bubble busting and whatnot, and I think obviously when people see the AI trade and they see what's driven the market since, say, call it the end of 2022 when ChatGPT, which is not NVIDIA, although they might use NVIDIA chips.
Yeah, I don't know.
Good question.
We'd have to double check on that.
Because they're definitely in that space. But when the AI trade, even though and this is part of the conversations, but I mean, machine learning and artificial intelligence, what's amazing, has been around since like the 1950s. I mean, they've been trying to do this for a long period of time, in the sense of, the concept was there, and then if all of our listeners remember Watson played human participants in Jeopardy, and
I remember Watson from, I'm a big fantasy football guy. So on ESPN they would have like the IBM Watson, what's it called? You would call it like their AI analyzer for fantasy drafts.
Right. I mean,
so it takes me back like 10 years, but that's what they called it. It was
right.
Like
that was IBM's version of
Correct.
it. So, I mean, the idea that artificial intelligence is new is incorrect. It's been around and been studied, but that 2022 breakthrough was huge because of what were called LLMs, or large language models, and it was what was called generative AI. It was the ability to ask bots, ask apps like ChatGPT, ask anything. Like soon enough, Apple's going to be coming out with their AI-powered iPhones and whatnot, but to ask these things to generate answers, to generate responses, to generate pictures, to generate images that were exactly like you asked. With the concept that these large language models, which had just learned all these large languages, i.e. just a lot of words and all the data out there, could then generate a good response. I went down that path because here it was, this massive move that's been helping to drive the markets from late 2022 all the way till today. Talking about how NVIDIA becomes this bellwether for this trade. Are we in the first inning, like you mentioned with Dan, that Dan Ives was mentioning, as a lot of bulls do? Or are we on the precipice of what was called the dot-com, like that bubble bursting? Where is this just another frenzy like the early internet frenzy? So, the internet came around. I mean, the same idea had been around for a while time, but really got adopted in the late 90s. And, here comes everything that had a .com at the end. I always love how the biggest example of that was called a pets.com. They always talk about pets.com as the example of that, when just it was like the straw that broke the camel's back. And they just said, okay, nope. Voila, this is all just smoke and mirrors, and the NASDAQ plummets, and it takes close to a decade for the NASDAQ to recover. So long story short, or long story question short, how is this different? Is this AI trade? Is the NVIDIA trade? Is it going to be like the dot? In your opinion, I know we're not trying to pick the future. I mean, I guess what are analysts saying about that? Are they saying it's going to be a lot like the .com days of the late 90s, and we're in for a winter before eventually the productivity of AI kicks in? Kind of like, as the internet went all hype, and then it went down, then it did change the world a decade later. Or is it no? We are truly in the first couple innings, and we're not going to see this. It's not going to burst, and it's just going to continue to roll on.
Yeah, I would tell you. I think the biggest thing too, before I kind of answer that question, is you got to look at what happened in 2000, at a moment in time. Because if you look at it, this whole internet thing was new to everybody. There was no ecosystem, there was no environment that was set up for these .com companies. So I think Mark Cuban puts it actually, pretty nicely, where he talks about how, everyone knew that the internet was coming. They just didn't know in what capacity it was going to look like. So all these companies that, had .com at the end of their company were going public, and, us, the retail investor, we couldn't fathom what the internet was going to turn into. So I think, that created a lot of, frothiness in that market. The difference that, people today are making the argument for AI is, it's a well-established, it's, again, even though we're in the first inning, you can make the argument, it's a still well-established industry with companies that, have wide moats, companies that are over $1 trillion in market cap. The companies back then in 2000, these were startup businesses that, just because they had .com associated with them, people weren't looking at the underlying fundamentals of the businesses, right? And they were just kind of caught up in the internet frenzy itself, which really frothed up that market and melted it down, in a short period of time. Here, it's a little bit different because, like I said, these companies are with the biggest moats we've seen in 25, 30 years. With the balance sheet and the cash flows to back it, and the products that support what NVIDIA and some of these other chip companies are requiring from them.
Yeah, and I could see that. No, it's interesting. I mean, I think if anything, personally speaking, my opinion in trying to, read tea leaves is that it's all about profitability, right? If Microsoft is able, as an example, is able to make it profitable, where people are doing their Copilot or whatever that may be, or a lot of the service companies are using the AI as sort of chatbots. So rather than calling or trying to deal with a human, if this AI thing is as good as a human answer, that's going to save all of this time. Or even in the financial industry, making us more productive because we have, great answers at our fingertips. Right. We're spending much less time searching and researching, where the generative AI can just, summarize our question, our complex tax question. Right. If Microsoft then, if that's got adoption, let's say for example, and they start to see profitability, then I think it will continue to run without any major hiccup.
Absolutely.
If profitability starts to suffer a little bit, I think you're right. I think they have enough cash flow to go through a dark time.
Correct.
So probably not a major bubble bursting like you're saying in 2000. I think investors are starting to get a little nervous about,
Absolutely.
Okay, we do have to see a little bit greater adoption. We do have to see a little bit more profitability from specifically from other industries to say, yes, AI has made our workers more productive and AI is starting to save us money, right? If you start to see those types of statements in the public companies when they release their earnings, they talk about it, then you're going to see truly first inning. Back to Dan Ives' comment. If not, obviously there's going to be some fallout, but I mean, and nothing, knocking on wood, and obviously neither Raf nor I can predict the future, but to see, since it's all backed, to your point, since it's all backed by profitable companies that aren't going anywhere, it really is tough to see any major or major correlation with the .com bubble burst.
And I would also add too, if you look at, for example, a company like Cisco back in 2000. Right, it was close to 500 billion in market cap in 2000, and over the years, you've seen a company like Cisco's market cap dwindle because they haven't been able to pivot. Mm-hmm. But a company like NVIDIA, more of these, bigger blue chip companies, like you've seen, Apple pivot from just an iPhone, or an iPod or whatever they were initially, to this massive conglomerate of, just hardware. And then a company like Amazon, you were talking about Andy Jassy and how initially, when they were exploring cloud services, they couldn't find somebody in the market to really dominate what they were looking for from a cloud service like solution. So what did they end up doing? They ended up taking what they were looking for and built it in-house, which in then turn, led to a lot of business with NVIDIA because, when you're building, these massive cloud storage solution systems, you need the chips to back it. But back to my initial point is, again, these companies have some of the widest moats you've seen. So, that's the biggest difference, like I said, compared to 2000, where most of those companies were startups and, very unprofitable businesses.
Well, I think the hard part too, as advisors and probably listeners to this podcast, sometimes we get asked, "What's the next NVIDIA?" We don't have a podcast or an answer for that. No. Actually, I'm sorry, I was speaking for myself. So, Raf, what is the next NVIDIA? Do you have anything?
Yeah, I wish I had a good answer today. I might have to come back on the pod with a better answer next time.
Yeah, it's so hard. I mean, because what I don't know for sure is again how unprecedented it is. Right. I mean, I was saying at the beginning of my time, my 25 years of sort of truly following the market. I've never seen anything like this, and that's kind of why I want to do the podcast, because August 28th, when they released their earnings, I mean, it was just it was one of the biggest days in the market in the sense of everyone was following.
CNBC was like hyping it up.
And just entire day, because I mean, obviously any big earnings release is a big deal, but this was it. And I can't imagine having that influence. But as you can see, that's really what it is. I mean, it becomes this bellwether for this AI trend. And yet, by the way, they had another blowout quarter, but yet it didn't. It was disappointing.
Yeah, I would tell you, if you looked at their earnings report, I think what the street was expecting was, and I'm going to use a tennis analogy because U.S. Open, finals is this weekend, but the street was kind of expecting the equivalent of a Djokovic to win 6-0, 6-0, 6-0, but he won 6-2, 6-2, 6-2. Mm-hmm. You know what I mean? So I think the market, and again, it's justified because NVIDIA's done so well, but I think we need to taper expectations for the next few months and the next few years as to what they're projecting, because at the same time, if you look at it, they reported very strong numbers, but if they miss on, if they slightly miss on revenue, the street's not going to like that.
Well, and not only that too, and I think the other thing that I think people need to understand, like I was mentioning about the profitability of the industry,
yes,
as AI gets adoption or adopted or AI adoption. I think certainly to NVIDIA. I mean, I think during those earnings call, they were mentioning that. Oh, you mentioned the chip earlier, not
the Blackwell chip.
Blackwell chip. I mean, it's costing them a little bit more money to put the quality into it, and then maybe there's some delays and whatnot. And I know that they have a relationship with Taiwan
Semiconductor.
Yes, exactly. I always get their acronym.
Yes,
TSM. TSM, right?
Yeah.
So long story short is that they might not have these blowout quarters every year, and profitability does suffer when you're pouring money into research and development, or you're trying to produce these quality of chips that stays on the cutting edge. I mean, I do get a kick out of that because that's also a wonderful example, as there always is, of investors and how hard to impress them they are, and also why just obviously, and I know it's old hat, but just the idea of taking that long-term investing idea, that sometimes companies will go through difficult periods, or just periods where their profits suffer because they have to reinvest in the business, they have to retrench a little bit, et cetera. So as you're saying, I think for everyone, that's all of our listeners, like having a measured expectation of where the stock itself may go in the short term doesn't take away from where the AI trend itself may be heading.
Correct. And to your point, you're talking about the AI trend not only today but over the next 10 years. I think we were looking at this offline. The AI industry now is at approximately 184 billion. Mm-hmm. They're estimating it to be close to $1 trillion in 10 years.
Yeah.
So that's the opportunity that's there, whether that materializes or not. We'll see. But again, that's the opportunity that's there for some of these companies to kind of sharpen their elbows and figure out who the winners are going to be. Today, again, NVIDIA reported, to your point, strong numbers, but if it's not picture perfect, the street might not necessarily respond, to the retail investors' liking.
Yeah.
So I think that's, to your point, we just got to taper expectations when a company makes such aggressive moves in the market in such a short period of time.
Yeah, no, and I think that's why too. I mean, it's what's great about our job in general is that as much as here we are talking about how NVIDIA sort of symbolizes the AI and who they are and what they do, we don't try, at SHP, we don't try to pick that winner each and every time. We don't try to, find the next NVIDIA or whatever, because back to that diversification that we were talking about and doing that stock intersection report, et cetera, we don't necessarily have to because the market will pick the winner.
Correct.
I mean, that's what I love about the S&P 500, as an entity. It's like it's what's called market capitalization, which is the bigger the company, the bigger the presence in the S&P. So if that company is going gangbusters, it's going to grow within the S&P. Now, there are people that will argue against passive investing versus active investing. That's for another podcast. Yeah. But it's more the idea that I just love that old line from John Bogle, the old Vanguard guy, which was rather than trying to find a needle in the haystack, just buy the haystack.
It's one of my favorite quotes.
Yeah.
I love that.
So that kind of underpins what we talk about. So it's a lot of fun here at SHP, especially when Raf and I get to sort of, chinwag about this type of stuff, is because we can dive into one individual stock or one individual company or industry or whatever that may be and talk about it almost like, bellying up at a bar, as compared to saying like, oh my goodness, is this going to be a good investment for our clients or not? Because no, we're not, whether or not we like this individual stock or like this company or like this story, it's like, no, we're still, when it comes to advice to the clients, we're still going to make sure that a majority of their assets are in diversified portfolios that are going to have exposure to these trends and to these companies and everything we're talking about, because no matter how much we might dive into it, no one can predict the future.
Right.
So you want to make sure that that your plan is in place. Then you get to kind of have these types of fun conversations of looking at the long term, looking at the big picture, looking at, okay, let's see what NVIDIA does or doesn't do. We're still going to move up and down by the market because they are such a big player. But at the same time, as long as our clients aren't in those 25%, exposure like we talked about, then we know that whether they are able to do it or unable to do it, or maybe they knock the ball out of the ballpark again and again and again, it's not going to come back to bite. Not going to come back to bite our clients and the long-term plan that they have, and just the long-term trajectory of the American economy. So. Thank you very much for coming on.
Appreciate you having me.
I think all of our listeners are going to be waiting for the next NVIDIA. So when Raf's on,
when I show up with my tie.
Yeah, right.
When I show up with my tie.
Next time he might not come in through the front door because we're not going to allow him until he comes in with his tie on. But no, really appreciate it. Hope that all of our listeners found the conversation engaging. Of course, we'll have show notes and everything from our producer Evan. But thank you again for joining us, and I wish everyone well. Thanks for listening to the Retirement Roadmap podcast by SHP Financial. If you've enjoyed today's episode, be sure to hit the subscribe button so future episodes are automatically downloaded directly to your device. And if you've liked what you heard, please share the show. Create your own little ripples so we can help even more people with their retirement goals. If you want access to all past interviews, including notes, resources, and exclusive content from SHP Financial, visit shpfinancial.com/podcast. Thanks again for joining us on the Retirement Roadmap podcast. And for all the attorneys out there, and disclaimers and disclosures, I'm just going to put on my super serious voice and add our own. No statements made during the Retirement Roadmap podcast shall constitute tax, legal, or accounting advice. You should consult your own legal or tax professional on any such matters. Information presented is for educational purposes only and does not intend to make an offer or solicitation for the sale or purchase of any specific securities, investments, or investment strategies. Investments involve risk, and unless otherwise stated, are not guaranteed. Our investment advisory services are offered through SHP Wealth Management, LLC, an SEC-registered investment advisor. Insurance sales are offered through SHP Financial, LLC. Our advisors and insurance reps may offer clients advice and/or products from each entity. No client is under any obligation to purchase any insurance product.